Hello, welcome to the first of what I hope will be a weekly series of trading video logs. These are primarily going to be a vehicle for me to ensure that I take the time to look back at the past week, reflect on my trades, look at what went well, look at what went bad, and learn what I can for making new trades. So my trade journaling habit is absolutely horrendous. And it's one of the most important parts of becoming a long-term profitable trader is effective journaling. So I need to get better at it. So I'm going to record these videos, talk candidly, put everything out there about my trades, and hopefully we'll learn together. I record all the normal stats and basic data for each trade I do, but I do not carve out dedicated time to do some proper trade reflection. I close the profitable ones and excitedly get into new trades. I get annoyed about the losses and attempt to forget about them. That's not the way to be sustainable with trading. So that's the plan. And I'm uploading them to introduce a bit of accountability. If I say to someone I'm going to be doing this every week and I upload them, I'm putting myself on the hook to do it. So hopefully I will actually make the time to do it and we'll get this journaling thing nailed. So what I intend to do every week is review the portfolio, have a look what happened in the last week, what trades closed out, and what went well and what went bad. So we're going to start by looking through the current portfolio, what trades I've got in there, what I intend to do with them, and how they're playing out. So we'll start with UPST. So you can see there, I've had that one on for 14 days. It's got 10 days left. It's a cash secured put that I sold at the 60 strike, and I'll go through why when we have a look at the chart. So if I bring UPST up, it's a company called Upstart Holding. It's a bit of a higher volatility play. It's quite volatile, as you can see in the chart there. So this is a daily chart, and there's the strike at 60, the blue line, and we're currently at 66.98 pre-market. Looks like it's going to drop on open 10 cents or so. That's fine. I chose the 60 strike because it was a sweet spot between where I could find a good support level, technical support level, and the premium I aim for. So I aim for about 2% on each of the trades I make on the cash locked away for the trades. Just a point of note, I don't use a margin account. I've been there, cost me a whole account once when we went for from the 2021 market highs straight into the 2022 bear market. Fair few scary margin calls and a lost account later. Yep, lesson learned, we don't do margin. So these are all full cash secured. So if I get assigned, I take assignment, I buy the shares, and we move on to covered calls. So I'm effectively wheeling these stocks. I'm a wheel trader if you want to give me a label. So where I could get 2% and find some decent support was the 60 strike, and I think this is quite strong support. It's struggled to break through it previously so it did form resistance. It was support here back in January, smashed through it here, down with the whole rest of the market when the Trump tariffs were announced, and then we came back up. We were resistance there, broke through it, and we bounced off it a couple of times here, making it a good support level, and it's actually pretty much bang on the 200-day moving average, which I quite like. So the plan for this trade, just let it run. It expires a week on Friday. If we get a good jump up at any point, and I can get around about 80% of the premium, I'll close it early. Otherwise, that one we'll just leave be. Right, onto Soxal. So Soxal, for those of you that don't know, is it's a leveraged semiconductor ETF, for want of a better word. There you go. Semiconductor bulls, 3 times shares. So this moves quick, and it's hugely volatile. I happily jumped into it because the premiums were awesome back here, not fully understanding what a leveraged ETF was, if I'm completely honest. I do understand now. So what happened? So I was selling cash secured puts back up here in June 2024. I got assigned first one at the, that's actually at the 50 level, you can't see on here. There we go. I got assigned up here at the 50 strike for one set of shares. Got assigned another set of shares at the 43 strike. And then Soxal continued to drop. So I immediately went into selling covered calls a month out. That's one of the learnings I'll come to in a minute, actually. Selling covered calls a month out. I just thought, well, covered calls will be the same as cash secured puts. I sell cash secured puts a month out, so I can sell covered calls a month out. It did not work for me. So what I kind of learned from that is covered calls from now on will be a week out maximum, giving me lots more time. Room to maneuver should the stock price start rising quickly, which is what happened with Soxal. So covered calls were great as it was falling. We reached this low in April, and since then it's been making a good recovery. It got away from me. It got above my covered calls, which were sold below my cost basis to bring in income. Yeah, I know, I can hear you all shouting, why are you selling covered calls below your cost basis? Well, I like income, and I like it to be regular. And I had money locked away in these shares, and I wanted to make income on that money locked away. So where am I at now? So I ended up having to roll out those covered calls to January 2026 to get it above the price. I think I was down at 24 and I rolled it up to 30. Now rolling, I didn't want to go much further out than January, so I could only roll for a debit. So I sold a couple of more cash secured puts down here, this blue line at the 16 level, and I used that premium to fund rolling these calls up for an overall credit. It wasn't a huge credit, but it was a credit. I'm not too bothered about having cash secure puts and covered calls on. Ultimately, by the expiration date, only one of them is going to be right. So I'll either Soxal will reverse and the covered calls will expire worthless, and I'll have to roll these cash secured puts, or like we're seeing right now, actually Soxal is right on the strike at 30 currently, actually pre-market 30 and 39 currently. Market's going to open in 21 minutes. So we're going to have to look at this trade. I mean, I've got plenty of extrinsic value in those covered calls, so I'm not worried about them being called away at the moment. What we'll probably do with this is we'll be able to close these for a good profit, these cash secure puts. Maybe sell a couple more higher, maybe at the 20 level, and then roll this, use that premium to roll these covered calls up again, hopefully without extending them past January. We'll see what the prices are we can get. And with covered calls, I am happy to roll for a debit, as long as that debit is less than 50% of the increase in your strike price. So if I was going to roll from 30 to 31, I wouldn't do that for any more than a 50-cent debit if I really felt that Soxal was going to carry on rising. So this one we need to keep an eye on. We'll see what happens today, tomorrow, the next week. Like I say, I'm not worried about it being called away. Huge amounts of extrinsic value in there. Right, next trade, PayPal. That looks a bit complicated. See if I can pull that out of it. There we go. So PayPal started life, this trade, as a calendar spread. So I sold the 74 cash secured put. I sold that, that was a 32-day expiration, and I bought a 70 strike protective put. And when I bought that 95 days out. So the idea was PayPal would continue bouncing in this kind of area here, and I would continue selling these. It was a bit riskier. I was selling at the money cash secured puts on this one. The premium was good, and the idea was you sell enough of them that pays for, and then some, the protective put, and you end with an overall profit. So a calendar spread is a bit like a credit spread, except it starts as a debit, and then you continue selling the cash secured put side of it until it covers the cost of the protective put that you've bought, and then it comes into a profit and you keep selling it. Unfortunately for PayPal, even though they had a good earnings, price dropped, and it's currently been bouncing around below my protected put, which is fine. That's why you have the protected put. Given the premiums I've received, my actual cost basis on this one is this yellow line, so I'm down at 71.18, and I am continuing to sell covered calls weekly at the moment. So on average, every week I'm getting around 30, 36, sometimes 28 cents for a covered call. So this cost basis should come down pretty quick. And yeah, because I've got the protected put, I'm not fussed should the PayPal price continue to drop. However, if it turns around and comes back up, then we'll ride the covered calls back up as well. So either scenario, I'm okay with this trade. If the stock price drops or remains flat here, we'll keep selling the weekly covered calls until the cost basis gets below the protected put, and then we'll just keep doing that, bringing in profit. If it turns around and starts going back up again, just as good for me. I'll keep selling those covered calls and rolling them up and out on a weekly basis, and yeah, we'll get the capital appreciation as the shares come up as well. Yes, the protected put value will decrease as it comes back up, but that was always the purpose of the trade anyway. I was always going to close that one out, or actually let it expire worthless, and the trade will be profitable on the selling side. So we'll see how that works out. NU. So NU is a company I really like. It's in my long-term hold portfolio. I have been selling cash secured puts on this for well over a year now, so it's done me well. As you can see, it's got some ups and downs. So I have been assigned and then sold the shares again and covered called them and been assigned and cash secured, but I've wheeled this stock for a while. But couple of months ago, just before earnings here, I did an earnings play where I bought a leap. You can see it down here at the $8 strike, because I my thesis for NU, if as a novice trader I can use the word thesis, is that I think NU can easily reach 20 in the not too distant future. So we bought a leap, and we'll just see how that goes. It's gone the right way, so the leap is in quite a bit of profit for me at the moment. You can see it is just touching long. Is that all-time high? Yeah, all-time highs for NU. So I expect this to be a bit of solid resistance. So it's going to go one or two ways. It breaks through the resistance and carries on going up. Great. It bounces off that on this try. And if we get a retracement back to the 20-day, maybe even the 50-day moving average, I'll sell cash secure puts on it. Cash secure puts bringing in that premium, it eats away at the cost of the leap. And in the end, you got the potential of getting a free leap. So we'll see. RSI, we're getting into not quite oversold levels, but we're getting pretty high there. So that's the plan for NU. I'll either sell cash secure puts if we get a retracement, or we'll just profit on the leap if it keeps going up. HPE is a bit of a sordid story for me. This is a trade that went wrong. I did play with the idea of just closing it and taking the loss, but it's a bit of an experiment. I want to see if I can get myself out of this one for a scratch trade or even a bit of profit. So back in, it must have been January, I believe, I was selling cash secured puts, or I sold 2 cash secured puts at 23. It was here. It was quickly assigned and then watched as HP went right down to its low at 12 from where my shares at 23 were. So I started wheeling this and was selling the monthly covered calls. And on this leg of the rise, it rose really quick. It got away from me. My covered calls were below my cost basis and way below the stock price. And it was a case of rolling out to get a credit, to the point where we were looking at effectively rolling my covered calls into selling covered call leaps just to stay ahead of the stock price move. So I had a good think about it, and what I decided to do with this one was turn it into a poor man's covered call. Basically, it effectively halved the cash that was locked away in this trade. So I bought 2 call leaps, you can see down here at the 13 strike mark, and they're out to January 27, which is as far as I could take them at the time. And I sold 2 covered calls at the 19 level, which is obviously way below the current stock price and way below the cost basis. So this is going to be a real long-term trade. The advantage of the leaps is, as I said before, it halves the cash I've got locked away, so I can use that other half for other cash secure puts while still funding the covered calls. So what I intend to do is let the extrinsic value of these covered calls drop away. So I think these are out to, let's just remind ourselves, when are these out to? So these are out to May next year. So these are long-term covered calls. That's how far out I had to go to get back to positions. Those are how far out I had to go to get a credit for selling them. And what I will do is, as that extrinsic value melts away, so I don't know, February next year we'll have a look at it, I will look to roll those up $1, and however far out in time that takes me, for a credit, and eventually doing that I will get above my cost basis. And if I get there, I'll try and go up and up and up and keep it going up with the covered calls if the stock price keeps going up. We are at recent highs for HP. It might be all-time highs, is it? Potentially. So we could get a turnaround here, maybe a bit of a retracement, some profit taking. Who knows? We'll keep an eye on it. But yeah, this is a long-term trade. I've accepted this cash is locked away for a while. And it's an experiment to see if I can recover a covered call part of a wheel trade that has gone as wrong as it can do. No fear of getting called away. The extrinsic value in these covered calls is still absolutely huge, as you can see here. So it wouldn't make any sense for the owner of those to exercise them without losing that. They could just buy it on the market, sell it on the market to get the profit. So that's my plan with HPE. We're just going to take the time, and as the extrinsic value goes, we'll look to roll up and out, and we'll see how that goes. HIMS. So HIMS is just the start of the HIMS trade. So I sold the 40 strike cash secured put. HIMS is another high volatility play. It tends to whipsaw about the place, but because of that, you get the higher premiums. So I was able to, I think this was an L18 delta. I was able to get 2% on an 18 delta cash secured put, 30 days out. So, and it's doing all right. So I took the 40 strike because it's the closest bit of strong support where I could get that 2%. And you can see the 40 has been good support here back in June. It was tested again here in August and more recently in September, and it's held for a while now. So as long HIMS tends to be whipsawy on news articles. I've traded HIMS for quite a while, and whenever they end up with a new court case, bit of news, or a fraud case, you get a big whipsaw. So we'll continue monitoring that one. How long has HIMS got left? It's only been open for 4 days, so yeah, we've got a while to go on that one. What I tend to do is when I put a trade on, I instantly put a close at 50% profit order on, so you'll see that in HIMS here. And if that activates before 50% of the time has elapsed, great. I can reinvest that money in another cash secure put for that month. If not, I will take the profit order off and I'll go for 80%. So that's HIMS. We'll just monitor that one and hopefully that will be an issue and drama free trade. ClearSpark. So ClearSpark's an old friend of mine from when Bitcoin was on its big run over the last couple of years. So ClearSpark is a Bitcoin miner, another high volatility one to sell options on. But I'm in a good situation with ClearSpark. You can see my cost basis is down at 720, just by virtue I've been selling cash secured puts on it for well over a year. I was assigned back here, when's that, like December last year I think it was, 300 shares at 12, and I have since been selling covered calls on it. And the thing I found with ClearSpark is, because it's such a high volatility stock, rolling is quite easy. It's usually lots of premium, and if you let the extrinsic value decay, you can roll quite cheaply out when you need to. So at the moment I have a 3 covered calls at the 13 strike. I've managed to get 2% for selling those as well. They expire this Friday, so then we'll probably look to sell something a bit closer down here, maybe at 12. We'll see what the premiums look like. But yeah, this ClearSpark is a bit of a fun experiment. I'm going to keep wheeling it in the hope that I can get the cost basis to 0. We'll see how that goes. And the final one in the portfolio at the moment is AES. So AES, it broke up above the 200-day moving average back here in July. It had a good earnings, which helps, and it's just been kind of steady at in this little channel between, what's that, 14 and my strike at 12.50. So hopefully again this will be a no drama trade, just tootles along. Sometimes when these companies break the 200-day moving average and stay up there, you get institutional interest in them. So if we see some of that coming in, we might get a bit of a pop and I can come out earlier. But at the moment it's just ticking along. And in terms of how long's left on that trade, it finishes this Friday, so I think we should be good. Where is it now? 13.03. Market has it opening in a few minutes at 13.02. We might even be able to close this out later today for 80% profit. We'll have a look. So there we are. That's the portfolio as it is. The plans for each trade. As I said before, this is a log for myself. Full disclosure, I'm a complete novice trader, so please, if you're watching this, do not take this as financial advice. My trades lose as much as they win. Don't copy me unless you're sure and you've done your own research and it's something you think fits with your own portfolio. These videos are purely for me to get better at the whole journaling piece of trading. But I hope you find it useful. Please feel free to comment, critique, scream at me if I'm doing something hugely wrong, and we'll all learn together. Hopefully I'll be back next week after another week of trades, and we'll see where the portfolio's gone.